Good morning, everyone. And there is some slight delay today's people due to some internet issues. I will start in another 30 seconds. So no worries. Now everything is set. I think we are good to go now. A very good evening, everyone. Once again, welcome to Pre-Bell with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst. Disclaimer for this podcast is that whatever the stocks we discuss in this podcast are only intended for educational purpose and not for any investment advice. So let's look into Nifty's daily chart, how the market is placed at this current moment. You can see barring yesterday, Nifty has been on the uptrend and it closed higher for 6 consecutive sessions. Yesterday was a highly volatile trading session. There are a couple of reasons for it. One of the major reason is that yesterday being a weekly expiry of Nifty and Bank Nifty options, there was a lot of derivative play which happened yesterday. That was the reason Nifty traded in a highly volatile range yesterday. However, on the closing basis, it closed just 0.04% lower, which is almost flat. So the uptrend is intact. Here you can see Nifty has been reclaiming their key moving averages for the last in the last 1 month. Currently, it is trading above its all key moving averages. After changing market status to confirm the trend at this point, you can see Nifty has advanced nearly 1,000 points, and it has reclaimed all the key moving averages. Since then, we had only one distribution day, that is here, that is Nifty closed 0.2% lower on volume higher than the previous session. Distribution day help us to track the weakness in the market. So distribution day count of 1 is a very good sign for longs. So if there is any further accumulation of distribution days, then we might turn slight cautious going ahead. However, at this current moment, we are continue to be bullish. We will be adding stocks to our model portfolio, which are giving strong breakouts or which are giving strong buy points and also reporting good numbers in the current quarter. Some of the key companies which reported results yesterday were Gujarat State Petronet. The revenue has grown 63% year-on-year basis. However, PAT, you can see it has grown only 11% when compared to revenue growth of 63%. This is mostly because of higher input costs. This is the theme for the last for the June quarter. Most of the companies are getting impacted by higher raw materials and input costs because of rising inflation. Next is BEML. I can see company revenue has grown 43%. However, it reported a loss of 82 crores when compared to a loss of 94 crores in the corresponding quarter last year. As of June quarter end, the company has an order book of 9,100 crores. And Balkrishna Industries, another good growth story company, which has been our watch list stock. You can see it has reported good numbers on the revenue front. Revenue grown around 45%. However, again, PAT declined 7%. This is again the reason is similar. The higher input costs and logistics costs have impacted this company. Some of the key companies which will be reporting today are Aditya Birla Fashion, Engineers India, NMDC, Nykaa, Paytm, M&M, and Titan. These stocks will be under radar. One more key stock will be Minda Corporation, which is near its pivot. If the company reports good set of numbers, it might be under radar today as well. So if you have any of these stocks in your model portfolio, please be watchful for these movements in the market today. Another key event today is the outcome of RBI's MPC meeting, which has started on Wednesday. It's a 3-day meeting. 3 days, board of directors, governors will be discussing what to do and how to tackle the higher inflation and keeping in mind growth story as well. So the overall outcome will be given today during market hours. So today's market will also be going to be volatile because of this. Mostly banking stocks will be under radar today. Yes, inflation has been the big elephant in the room, not just in India. It has been a global theme everywhere, starting from US, UK, Europe, all the Asian countries as well have seen higher inflation rates. Recently, US Federal Reserve has also increased its repo rate by 75 BPS. The total they have increased around 225 BPS during the recent cycle when the inflation has been going higher. Yesterday, Bank of England has also increased interest rates by 50 BPS. This is the highest rate hike they have done in 27 years. This signifies how inflation is playing out at this current juncture overall globally. So most of the companies' earnings will be impacted. Growth will also come down slightly because of this inflation. To tackle inflation, the central bank has to increase interest rates. When the interest rate is increased, money spending in the market will come down because of higher cost. So this will have a negative connotation for businesses because they'll decrease their capital expenditure because of higher expenses. They will cut down their capital expenditure. When they are cutting down the capital expenditure, then the growth for the company will be coming down. Overall economy will be impacted. Job losses will be there. So this is what the theme is happening, and there is a recession fears are also looming across the globe, majorly US and UK. However, Indian government and Indian finance minister are pretty much sure that a recession is not going to happen in India, and there might be some small impacts which will be happening to Indian market, but overall we are slightly more resilient when compared to global markets. Expectations from this RBI meeting outcome is that 25 to 50 BPS rate hike is on the cards. This will be the third consecutive rate hike if they come out with a rate hike today. Starting in May, they have increased 40 BPS, and then in June MPC meeting also they have increased 50 BPS. Total 90 BPS they have increased. Current repo is at 4.9%. So if they increase another 40 to 50 BPS, then most of our loans will be costlier. Home loans, personal loans, business loans. So all these loans will become costlier. So EMIs will increase. The RBI is going to increase the repo rates. Talking about the global markets, US market was slightly mixed. You can see tech heavyweight Nasdaq closed higher, 0.4% higher. However, Dow Jones and S&P closed with a negative bias. Asian markets are also trading flat to positive bias. Shanghai flat 0.1% higher, Nikkei 0.6% higher, Kospi 0.8% higher. One positive outcome for Indian market is that as the recession is fears are coming out, and the growth will be impacted. Crude oil is getting impacted as well because of demand will go down when the growth is coming down. Thus, oil prices fell Thursday. It touched a rate of $93.5 per barrel. This is the lowest level the Brent crude has touched since February 2021. This is a very good positive sign for Indian market because we have been importers of crude oil. When the crude oil prices come down, our imports will come down, and rupee will strengthen because of a lesser spending we are doing. This is a slight positive outcome. RBI has estimated Brent crude to averaging around $105 per barrel in the current financial year. Anything below that level will be a positive sign for Indian economy. So today also RBI will come out with these numbers, growth numbers, inflation numbers, and Brent crude what they are expecting. So please be watchful for those areas as well. We'll be sending a key note on RBI's meeting as well. What are the major outcomes the governor has made? So I will be sending out that note during market hours as well. Likewise, with Asian markets, SGX Nifty is also indicating a slight higher to muted to higher opening, around 60 to 70 point higher opening we might see on Nifty. if that opening is sustained and if the Nifty trends higher, we might see another good follow-up buying session, which will happen today. So we might be adding stocks to our model portfolio as well if any stocks are giving good breakouts or reclaiming the key moving average during the market hours. This is a sectoral review as of yesterday's closing. You can see yesterday's it was a mixed reaction on the sectoral front. Pharma was a top gainer with 2.4%, and followed by Nifty IT and Nifty Metals. On the loser side, we have realty and banking stocks, which closed 0.5 to 1% lower. We had three sectors which have given distribution days yesterday: realty and pharma, and small cap index also had a distribution day yesterday. Nifty escaped distribution day because the loss was very minor, which was 0.04%, which is not considered. And one more key aspect to look for is that all the major indices in Indian market are trading above the 50 DMS, which is a good sign. We would want these indices to reclaim the 200 DMS as well. For IT is lagging at this point. You can see it is around 13% below its 200 DMA. If these companies from IT, TCS, Infosys does well, then IT index will also reclaim 200 DMA. Then the overall Nifty might hit all-time high by the time IT makes a reclamation for 200 DMA. For the chart of the day, we have taken Devyani International. The stock has been under our buy watch list for the last couple of sessions. It has been trading in a very long consolidation base pattern. During the right side of the base, you can see there is strong accumulation happening. The price strength and volume both are looking very good. RS line has also made trending higher. This company does franchises in India. Brands like KFC, Pizza Hut are the franchises of this Devyani International. So there is a very long scope of growth for this company in India. We are still in nascent stages compared to other our peers. This company has a strong ratings. You can see master score of 83 is very good. Price strength is also improving at 75. Accumulation distribution rating is also at A minus, which indicates a good accumulation for the stock in the recent. This company will, after results, you can see it has reported a very good set of numbers, around 400% of EPS and 100% of sales. That is the reason there has been a good accumulation happened at this point. It is the stock is around 7% to its pivot, also 7% to its off-whites. If that overhead supply is reclaimed and if the stock closes above the pivot, then we might add it to our model portfolio. Number of funds invested in the stock has also been consistently higher, starting from September 2021, 92. It has increased to 125 funds in June 22 quarter. So overall, most of the aspects for this company are looking pretty much good. Technically also, it is very good setup. You can see a stock has good support around 140 levels. Around 4 times it has rebounded from that level. That indicates a good support for the stock as well. Good accumulation. Everything is poised good for the stock. And if the stock comes under our buy watch list, that is buy range, then we might add it to portfolio. Thanks for joining today's pre-bell. Have a good trading session.